Good night, folks. We are Thursday, 29th of May, 2025. So I come back today after the big dump on EOSE, an old story I'm talking about for the last year. So to be crystal clear, I've been buying into the close around 4.5, 4.6. Several different buys during all the fall down. I know a lot of people have been adding at 4.8, 4.9, 5 during the day. At 1 p.m. The stock was near $5, so it was a big dump into the close. I just checked the numbers today. Total volume, on the total volume, it was 78% short volume. So what you need to understand with EOS, I will try to summarize. I will not go into details of the financial PR because it's very technical, and when you go deep and you read, people who know how to analyze that, it's not a bad deal at all, but it's very technical. I will just comment on the big things, not the detail. So what you need to know on EOS is that EOS have a lot of shorts around, a lot of people who don't believe in the story. There is around like 70 million shares short in the market, more today with the today volume. So I suppose today they increase the short position. So all this short, they need to protect their short. So with the CFO news leaving, plus the new financial arrangement, they take advantage of retail panic to sell a lot of shares short. Why? Because the stock, if you see the chart, have been running from $1 1 year ago to $7. So it was a 7-bagger in 12 months. So naturally, the short, were heavily underwater. And naturally, today it's for them a big occasion to protect all the short. So naturally, they increase their short position today, for sure. And now you will, during the day, you can be sure that a lot of retail have been selling. So, the short, it's very difficult to know exactly what they were doing, but you can be sure that, they have been covering at 4.6, 4.7, and they have been reshorting at 5. And at the end of the day, they short massively to push the price as low as they can. In my humble opinion, short are targeting a big resistance line with around $4. And that's maybe the last occasion that they have to cover a lot of short position that have been piling up, from $1 to $7. So that's an important factor to understand, because I'm reading all around the social media that a lot of fund manager don't understand the percentage that the price have been going down on the news. They think it's absurd. So yes, it's absurd, but if you know that the short are all around this story, you understand what happened today. Basically, they have been punishing every run-up to recover to $5. And, at the end of the day, a lot of people who don't really know the financial detail of the arrangement have been just thinking, this is dilution, this is a scam, let me sell. Why? Because some people have been buying at $1, $2, $3, and they are still green. So when they see that, they say, okay, let me sell at 5, let me sell at 4.8, 4.7. I'm still green, so let me sell. I can understand that. Personally, I was out of the stock because I was busy on other stock. But I've been buying again heavily because I think that you don't have this kind of opportunity of exaggerate sell-off like we have today. So don't understand badly what I'm going to say. The stock can, basically turn around 4.5 and even drop at 4.2, 4.3, something like that. But if you zoom out, you need to understand that a few days ago, this stock was at $7 and basically piling on good news, a new contract in the UK, this and that. I was keeping an eye on the stock, but I was saying it's too rich for me. I don't want to pay $7. At 4.5, it's another story. Naturally, the company is still expensive. It's not a penny stock, but the project and the backlog is massive. And basically, if you look around EOS, you can say that there is no real competition with the product they are proposing. No fire risk, US made, a lot of advantage of the technology they are proposing. And, basically they have the DOE funds. And now, even if I don't want to go in detail, because my English is not enough good to explain the detail, but what you need to understand is that Cerberus, who have been committing a lot of money in this project, are taking a lot of risk with the new arrangement. Basically, they take 7% interest instead of 15%, and they delay the right to sell shares to mid-2026, and not in July 2025, plus a lot of other detail, So you don't have to be a genius to understand that if Cerberus, who is by far the company was having been involving the most money of anybody else, if they do that, it's basically because they know big orders are coming and that the company needs to scale quickly in order to open line 2, 3, etc. There is no chance that they will accept that kind of new arrangement if they don't think basically that the stock price, for example, will not be above plus $10 before end of the year. Naturally, they know things that we don't know. That's logical. They are working with EOS, and they are the main, advisor around them. And we don't know a lot of things. We don't know why they fired the CFO. We don't know why they accept this new deal. And the only logical response is that big customers want to have some security that EOS will be around before committing a big contract. And this new financial arrangement go in that direction. Basically, they are pushing some debt that they will need to pay, in 2026, 27 to 2032, 33. So they are gaining a lot of time. Cerberus would not have the right to sell shares during the summer. That was the arrangement normally. They will only be allowed to sell shares next year. So, we can guess that they want a new CFO who maybe is more, famous, or who feel customers more secure, some maybe a big name or something like that. And Cerberus basically is saying to the market, we are heavy on EOS and we are de-risking the company so you can sign big contracts without fearing some debt repayment or big dump in shares that will be, that Cerberus will be selling during the summer. That will not happen. Shorts, I've been shorting because they were expecting Cerberus to sell shares and warrants. And now that this thing is not going to happen, that changed a little bit the scenario. The fact that they have been shorting so much today, let me think that we may be facing some big manipulation, because, on every social media you have shorts who are writing articles, who are very active on EOS, and it's not easy to sell a short report on a company who have been running from $1 to $7 in 12 months, because your customer are really unhappy. Everybody who have been listening to short have been losing money this year, So now, with this big decrease in price from 7 to 4.5, it's a lot of market cap who have been erased. It's like, I don't know, you need to figure, but I don't know the exact float, because it's different kind of numbers are running around, but let's say it's around 300 million, and I think it's more. That's mean that you have 700 million in market cap who have been erased, because it's $2.5 multiply by the float, so it's a lot of money. Cerberus certainly know that will happen when they release this kind of news. And if they let it happen, there is again some reason. Who exactly know who have been buying today? Because all these shares, it was record volume today, all these shares have been finding buyers. And it's not retail. Retail, a lot of, how you call them, a lot of fanboy of EOS are already fully loaded. They have been buying since $1 and then buy. They buy every dip. A lot of them were complaining on social media that they don't have a lot of dry powder and that they are ready to sell some shares that they have to buy more EOS, sell Tesla shares, EVX, iron, Bitcoin mining. They were ready to sell all that to buy more EOS, because they understand that this is a kind of manipulation to push a lot of retail out, to satisfy a lot of big short players who can cover. And basically that's changing the whole structure of the company. The dilution, you have some dilution, but when you see that the numbers are running around, it's a kind of not very significant, especially with the advantage of pushing the payment of the debt 6 years away at a higher percentage, from 15 to 7%. Basically, the message is clear, is that we take some short-term pain in order to have mid-term or long-term better gains. Because naturally, EOS is going to save money on the fact that they will pay less interest, they will have to repay less debt, and they will have more cash to expand and to, basically build new lines. So they will be able to accept big orders, that it was not possible without all this new arrangement. So again, short-term players have been selling, and I'm convinced that institutional people who understand how to read a PR, financial PR, they have been buying. I have a friend of mine who's specialized in finance, who have been analyzing what they have been saying, and the guy, well, unfortunately, you know, he was buying all he can at 4.9 because it's that's 20% is too much. Now we are at 4.4, 4.5, so he's losing money. But he explained me in detail, and basically I understand that this was necessary. This was necessary to accept big orders and to make big customer feeling more secure. They need to do that if they want big orders. So, yeah, the price, stock price, maybe, I don't know, maybe weak for 1 or 2 weeks around. You know, I think we are going to run around $4 to $5. Maybe tomorrow, Friday, there is so many puts, option puts at 5.5 and 5 that we may have a short-term rebound tomorrow, because there is massive position under 5.5 and 5 puts. So people are just betting that the price will be inferior of 5.55. So actually they are right. And if tomorrow we don't have a rebound, they will be making tons of money. Sometimes, you know, it's complicated because the shorts have some option strategy. If they lose on the short, they win on the option. So you don't know exactly who is doing what. What we know is that short have been artificially pushing the price under $5 to 4.5, and they have been, you know, basically destroying every rebound to avoid basically the price going back to 5.55. So now we are in kind of zone of, how can I explain? A zone was difficult to manage because the chart is broke. Retail, who have not been able to sell today, maybe selling tomorrow and Monday. On the other side, I'm convinced we are going to see some big insiders, institutional, taking advantage to increase position. But you need really to think about why Cerberus, who is very heavy on EOS, I mean, they have been committing a lot of money. Why they have been accepting less interest from 15 to 7 to push the date of the payment 6 years later, and why they accept to lock up their shares for another year. That was not in the previous arrangement. These guys are not stupid. They are not, they are not here to play games. If they do that, is that because they know big customers are ready to sign, they need to be feeling secure, and it's not the right time to sell shares or repay debt. It's time to expand and build new lines to respond to big orders. It's crystal clear. I mean, if that's not the case, that means Cerberus is completely incompetent. They're not smart, and they are basically shooting themselves in their foot. So that's make no sense. Because naturally, all this arrangement was made with the agreement of Cerberus. So I know there is a lot of naysayers, there is a lot of shorts who have, well, be saying this company is overvalued, this and that. The problem with a company who is on a hyper growth and basically have big backlog but not enough production is that you absolutely don't know what will be the numbers. So people are guessing, people are guessing. I think we expect something around 200 million in sales this year. But this is the very beginning of the story with one line and this and that. The big orders, the big customers will come when there is 2 or 3 lines and when they have all the guarantee that they will be around to ensure delivery and, maintaining the system. And what happened today is that Cerberus and EOSE give that guarantee. So in my humble opinion, if we have weakness, I don't know. Weakness mean, in my book, the stock trading between $4 to $5. Don't forget that a few days ago, and if you look at the chart before all the good news, the stock price was at this level. So basically nothing changed. The contracts are there. The buildings of the new lines are coming. The backlog is there. Just the financial arrangement changed. And it changed not on a negative side for EOSE, but more on a negative side of Cerberus if things don't go well. If things don't go well. And in my humble opinion, if Cerberus agree all this, it's because they know orders, big orders are coming. So they say, okay, no matter, let's go down to 7% and we keep the lockup for another 12 months. No way they will accept that if there is no guarantee and if they don't feel that things are going in the right direction. That's, crystal clear. So do what you have to do. You can verify all the things I'm saying, 7 million shares short, 78% of today's volume was short. And basically, as a foreigner, I feel it's a little bit disturbing, but what you want me to say, I don't know what to say about American analysts who write on different media. How can you short and hope for bankruptcy for a US company that can push your country in more independence and better product, most safe, American made, instead of, basically buying Chinese product? And all these American analysts who basically are hoping by shorting and publishing negative comments, it's a kind of, like traitors, that basically want their country to be forced to buy to China instead of buying Pennsylvania product from EOSE. So, it's a little bit strange. And you will see, when big orders are going to come, you will see big covering and you will see the tone is going to change. Actually, they are talking and writing like that because they have tons of shares short in their hands and they want to make money. They are dreaming about, some kind of bad news, fire in the factory, canceling contracts, Cerberus was going out of business, I don't know. And today, the fact that it was a little bit foggy, plus the CFO leaving, gave them the opportunity to make some money, to short even more, and basically to cover at a very lower price than back like last week where the stock price was at $7. You know, $7 to 4 or 5 is a big difference. A big difference when we are talking of big money. That basically is, you know, I know people who are basically moving in the market the price of a house. They are moving like $400,000, you know, retail, big retail. And I know that some of them have been buying at 6, 6, 5, 7. Today, they are taking a big punch in their face. If you buy, example of 100,000 shares, that's mean that last week you have $700,000, and now you have $450,000. So you have been losing $250,000 in a week. That's huge. And naturally, that's always the problem to buy during a run-up. You never know if you have some kind of dilution, some kind of bad news, some kind of foggy situation. And if you commit big amount of money, you know, that's the reason why I was not buying EOS at 7 or 6. I say, yeah, it may be going to 10, but I don't want to take the risk. Now at 4 or 5, I take the risk because I know that 2026 will be huge, massive. And the next 6 months is the last 6 months of regular business. Next year and even more 2027, it will be a cash machine. So, you know, it's maybe the last chance to go in under $10. And after that, don't be surprised to see EOS at 15, 20, $30 maybe, end of 2026. Because let me tell you what happened. When big customers sign, other companies see that, and they say, if this big player accept EOS product, let me get in too. I want to have some container of battery too. I don't want to be waiting too much because there is no supply available, and I will need to wait because the first customer will be the first to be delivered. So you can have a kind of chain reaction. At the moment you have, you know, a big player who just commit a big contract. So it will be very interesting. I don't say we may not dip further. We may see $4. It's possible. But what's important is what's going to happen to the price at the end of 2025, in the next 6 months. Facing a 2026 year will be massive. And you know the market always anticipates news. So, you know, 4, 5, I'm okay. 7, it was a kind of dangerous. Today was the proof that I was right, it was dangerous. But what I like with EOS, I have an eye on other company. What I like with EOS is a kind of unique proposition. It's the only American company who basically are building this battery in the US, who have a DOE loan, who expect to be green, EPS green next year, with strong support from Cerberus, and with a technology of that nobody else have in terms of security and duration, etc. So that's mean that it's a kind you have no choice. If you are a US company, you want a great energy storage proposition, or you go to China, or you go with the EOS. And with Trump pushing for US-made products, EOS will be, you know, at the front of the scene. So let's see what happened. I know it's bad news for people who have been buying at $6-7. But if you want to see big contract, if you want to see big commitment, they were forced to do that. There is no other way. So it's sad, but it's necessary. And for the one who just buy like me, I want to say thank you, because I was thinking, yeah, it's over. EOSE will go to $10 end of the year. We are already at 7. It's dangerous. Too bad. Let me find something else. Now I can get back and, basically be back in the story. Take care, folks. Thank you.